Good morning, everybody, and welcome. It's TheoTrade Chat. It's Don Kaufman here. Look at the date. It's September, and here comes the volatility. That has been, well, a point of mine for, the last week, 10 days. And here we are. We're into the month of September, and we're starting off with a little bit of a bang. Some really kind of critical moments in the marketplace right now. Some big inflection point that we've actually crossed through. Obviously, you guys can look at volatility and see that the VIX, like, holy crap, all of a sudden you're talking about the VIX later today could be at 20 easily. The volatility futures have kind of ignited to some degree. It's one of the first things I like to look at in the midst of a kick higher in vol. And this is definitely a kick higher in vol right now, right? So one of the aspects that I want to look at is how serious is it? And we're going to look at that after the cash open. 50 seconds to go to that open too, and not a moment too late here. So one of the things that has really broken apart, specifically this morning, is none other than Nvidia. Nvidia has really cracked substantially lower this morning. It's actually been kind of just ebbing a little bit lower, even more so than the market on a percentage basis. Watch this open here, people. We're opening up down here at like 69, 169. It's a big move. It's also a critical threshold for the underlying. So as we come into the cash open today, we'll also look at things like financials. The financials they're not faring too poorly. Just a bit early. They're not faring too poorly in here. Of course, the energy sector is taking a little bit of a hit, but this is big tech taking a big hit out of the advanced decline line. It's poor. It's not full-blown correlation yet. It's definitely, though, taking a hit across the board. I'm just going to throw it out there right now. In the SPX, you ready for this? The expected move is 86 bucks. Right now, we're almost on it. So if I cruise over to the SPX, that's it, people. We're home. Literally, 10 seconds into a trading, we're hitting it right now. Like 10 seconds into the trading week, and we're home. So we've just hit the lower edge of the expected move. I know I should have had a butterfly on. It's coming. It's ugly out there to begin with. But look at Nvidia on a percentage basis, it's down 3%. It's the leader of the pack. There's huge news right now about Taiwan semiconductor. There's huge news about Nvidia. I'll be very frank in saying I can't believe it's not down more. If you look at Taiwan semiconductor, look at this crap this morning. Huge news in here. And it's recovered substantially. Like there were some ticks down here to 213. It actually bounced right back to 225. Don't get me wrong. Taiwan semiconductor is down, but it's only down 2%. This could be an area of contention. Look at that, right on the lower edge of the expected move. I like a little violence in my trade. This is the way to start the month of September. I like some violence. So the advanced decline line is not absolute dire. There's actually pockets still. That is not a positive for markets. It's actually a negative. If you take a look, for instance, Walmart's up, which brings me to XLP. And the reason I want to go to XLP immediately, look at that. Consumer staples has actually got a bid underneath it. Okay, people, trade is running for cover right now. They're running for cover, and there's not too many places to go. The bond market is getting tagged hard. In fact, if you looked at the core of what's actually causing the sell side activity in the S&Ps, most people are going to start talking about a bond crisis. The bond crisis in France, okay? The Dutch, okay, the Netherlands are actually talking about it. What are the 10-year they're called? I think it's oats. Or is that in France? I can't remember. I think it's called oats. Britain has actually got a little bit of a bond crisis going on. There's big sell-offs in bonds around the entire world right now. That sell side activity in the bond market is doing one thing. What is it? Interest rates are rising. Okay. And this has been my contention. The spending is out of freaking control. Right now, you're actually seeing the TNX. It jumped Okay, it's one of the, actually, if you look around on the chart over here, and you can look around on the chart with me, there's some gaps in here to the downside and so forth. This is a huge, you know, drop, if you will, interest rates. Look at the size of the gap though, right here. It's massive. It's actually one of the bigger gaps that you've seen in the bond market, okay, in recent history. And the gap is actually to the upside. So if you're looking for a source, you know, people constantly want like a narrative that goes along with markets. I'll give you a narrative, okay? You're about to get totally rocked in the bond market. The bonds are going to sell off. The interest rates are going to explode. They're going to have to step in and probably do something. So if you take a quick glance, though, this is the TNX. This is the 10-year. I'm actually going to pull up, okay, the TYX. And the reason I'm pulling up the TYX, it's hitting 5%. It's big number. Take a look over the last 3 years. Okay, this is a 3-year daily. There's one instance of it, you know, a little higher than this right now. You can pull up like 15 years. Okay, then you got to pull up max chart. I mean, you got to come back to see rates where they presently are. You got to come back to 2005, 2006 timeframe, which is wild. I mean, we're talking about some really substantial moves. So you notice I haven't spent really any time in the S&Ps because look, I know where the S&Ps are. They're trapped on the lower edge of the expected move. There's a lot, I mean, gone over in the last 4 minutes already in here, but there's a lot of crap hitting this market and hitting this tape. I am going to look over at the Bank of America trade. I'm going to look at Boeing in a second. The reason I'm looking over at Bank of America, it's getting popped by the tune of 2%. We just put a spread on this last week. This thing's going to hit its 30%, very, very likely to hit 30% today. We just put this trade on. So we're well positioned now in Bank of America. I've had a couple of those where it just works out almost immediately. Our TLT trade, which, I mean, look, I wouldn't even bother looking at it, but I get emails and like taking heat, like, oh, the TLT trade you put on sucks, right up until it was actually profitable. I'm surprised, frankly, that more people haven't shorted bonds lately. And that's a trade, by the way, in this TLT position. I am not taking this off anytime soon. $5 wide spread. I will see that trade in hell before I take it off early. Okay. That one, bonds better get absolutely torn apart. I'd rather lose money on the trade than not have an absolute grand slam home run. This is not a trade. The TLT spread is not a spread that I will take off for a 55% gain. This is not an in-out spread. This is an out of the money put spread. This is a trade that we're going to hold thick and thin. We're going to have to hold it for a while because it's got 45 days behind it. All right. So plenty of time over here. And it is just critical that we hold that spread. Nevertheless, so markets are bouncing around a little bit this morning, but let's cut to the chase and let's actually talk a little bit about the expected move and some of the volatility hitting the tape. It's very important. Okay. Very important to kind of grab hold real quick of where we're trading. Give yourself like a little bit of like orientation of where we're trading, okay, and the range that we're in. And by the way, I'm doing this as much for me as I am for you. The reason is, okay, I spent some time like, okay, the lower edge of the expected move is, 63.75. So with today's volatility, there's going to be a pretty expansive window of at least 15 points, that we're going to be able to move within. So I'm going to box it out right there. Okay. This would be like the minimum. What I'm talking about, okay, in this respect is, and it's just amazing to see this, the efficiency of the marketplace. Okay. News comes out of left field. Okay. Hits markets. We literally tag the lower edge of the expected move. It's like this obscure number, whatever, posted in chat, yada, yada, yada. I was talking about it on last weekend's video as well. And here we are, we're on it. I mean, literally, that's the number hit spot on. So now you're like, oh, we're rallying off of it. Listen to me, nothing matters, okay, within about a 15-point range of this level. If we're going to rally today, let's say we're going to rally back, okay, I don't want I don't want to discount anything in a market like this. But let's say we're going to rally. Okay. Coming up to 63.90 does not constitute a rally. It's nothing. It's a pile of crap. You're sitting there, you're on the expected move. There's nothing. Okay. I don't want to hear like, oh, the ticks are picking up. Oh, it's getting better over there. Okay. Don't get caught looking for a move that simply is not there. So on the upside, of this range, and it's important again to define these ranges. So you have 63.90 to the upside, right? To the downside, you're somewhere around 63.60. Okay. That is, if you will, the points of freedom to which we can move in that are associated with, again, this is the, I can't write with this thing. This is the lower SPX expected move. The expected move for the week, basically 86 bucks. I'll get real specific in a minute. I think it's 86.36 off the top of my head. Okay. So $86, we hit it right out of the gate. We're home. Okay, great. So we kind of checked that box in the week already. As I said, this is not a rally back. We're going to flow. We're going to come down here. We're going to do a little dance. We're going to make a little love. So the marketplace right now, okay, it's like hands off because we're already trapped on the lower edge of the expected move. And it is really important, okay, to know just that right off the bat. All right. Somebody was saying having a couple people are having trouble with Tasty. They'll work it out in a moment. Okay. I actually have I have a lot more faith in them, but don't freak out. Don't anybody freak out. I mean, honestly, what do you want to route? This is like routing into some heavy traffic over here. So so just ease up and wait. Okay. I mean, again, I'm not all punchy about trying to route a trade in this just yet. It's early. Okay. We'll see. Anyway, so we're going to come and we're going to flirt with this again. 63.60, 63.90. That's in the SPX. That's not in the S&P futures. That's in the SPX. So if you want definitive numbers, like if we break above 63.90, okay, then let's start talking about a rally. Until then, you got nothing. And I'm going to tell you right now, I suggest, that we'll probably test 63.60 at some point today. Why? I mean, we opened really weak and the advanced decline line, is coming off heavily right now. We're that close, people, to full-blown correlation. Now, that advanced decline line is starting to matter. Didn't matter when it was 30-70. Didn't matter when it was, 80-20. Sure as hell matters now, doesn't it? Okay. You got 90 products to the downside, which means stuff like Walmart. I didn't look back at Walmart, but stuff like Walmart is going to start to take a hit, right? Look at Walmart. What's happening to Walmart? Okay. And again, it wasn't even on my radar screen, but stuff like Walmart's going to start to take a hit when that advanced decline line. So the entire XLP, which was an area, everybody's like, run to XLP. Look at the XLP since the cash opened. You're 11 minutes into a trading day, and the market's already evolving. What's it evolving into? Evolving into a crap fest over here. We are seeing a little bit of buying, if you will, inside of the NASDAQ. Okay. Pretty strong bid has come into the NASDAQ since the cash open. Is it anything to really even consider? Well, it's Nvidia right now, and Nvidia's got some rough news on it. Okay. Nvidia just clawing above the 170 level again. We'll see. Okay. We'll kind of play wait and see over here. I can say, like right now, Nvidia, just the last 3 trading sessions, starting to get to like some pretty hideous territory really quickly. Take a look at Google. By the way, I told everybody like I got out of Google because I got nervous in Google. Okay, nervous. All right, so Google is over and done with. Look at the Amazon sitting on the lower edge of its expected move. By the way, I have no illusions about this little bid back to the NASDAQ. Okay, I'll make this clear. I believe this is about to be sold into and sold into heavily. Okay, why do I have such a belief? Okay, why do I have such a belief? Volatility is still kind of holding its own out there. So as long as this volatility is up a point, they're going to come in, they're going to sell that NASDAQ future. By the way, speaking of NASDAQ future, let's cruise over to the QQQ. What is piece of crap platforms moving things around on me? Okay, pulling up trades, moving things around. I hate that. Come here, right there. That's where you belong. All right, everything has to have a place. And if it doesn't have its place, Don will completely lose his crap. The NASDAQ also hit the lower edge of its expected move. Of course, this is using auto expected moves. It's not as precise, okay? But I'll take it. All right, onward over here. Okay, so it looks like, we can confirm Tasty trade may be down. Order routing might be down off Tasty. All right, I'm getting quotes. There's nothing worse than getting quotes, not being able to trade. Well, that's surely a way to start off your September. I'm just looking. I'm shopping. Okay, shopping. Ooh, look at that. Boy, my Christmas tree is moving big. Big move and a little Christmas tree. What I got in here? Google. Totally forgot to get out of that one. That's just great. All right. This is what happens when you trade. Oh, look, Tasty. Okay, Tasty is unable to connect. Naughty monkey. Okay. All right, look for the cues to roll over here in the next couple of minutes. The advanced decline line picked up to the downside. We're off to the races here. So let's start to break it down over here. Okay. I'm cracking up because somebody just said like interactive brokers is running like a dream. Okay. Yeah, it's running like a dream, like on 20-year-old technology. But it works, man. Okay, but it works. Yeah. So does a bicycle down a freeway. Onward. This thing is pissing me off. I may have to actually close it in the background because Don's getting angry. They're having network issues there. Interesting. All right, we're just gonna. I just want to close the platform for a second so the message doesn't keep coming up. Okay. Onward. The S&Ps at this point, again, under a little bit of duress, just by about 1.2%. Just to give a little perspective, okay? This is, it's the beginning of a move, but it's still a nothing move, okay? The end of the beginning of the end, I have no idea. But one thing I will tell you about this, okay, is I keep bringing up the exact same chart. And now, okay, literally in my weekend update, I was talking about this. Apologize, I overzoomed. Okay, overzoomed. In the weekend update, I was actually talking extensively about this. We have been dancing, right, with this 6450. And the moment that we cracked under 6450, okay, look at the acceleration. I'm actually going to let you, okay, look at the acceleration of the move through 6450. Okay, because I've identified this as a pretty pivotal area for markets. So we are considerably under that. We basically closed last Friday, okay, in and around it, where you're flirting with, 63, 60, 64, 67. And here we are again, the acceleration, okay, is massive. Now, okay, doors wide open for a quick move into 6250. And okay, you don't know anything in here. All you know is that inside of this range, we've cycled very, very quickly. Okay. I don't believe that there's any levels of support over here. I'm not really buying that, but the door is wide open throughout the rest of this week, it's only a 4-day trading week. Okay. But the S&Ps have made at this point a very strategic and critical break below the 6450. And again, we're right back into that volatility box. This has been a level that we have been in, okay, since the end of June. You've now got, June, the end of June, okay, all of July, all of August, now the beginning of September. So you're, almost 9 weeks into what is an incredibly tight volatility box. And to me, one of the warnings in here, and this is nothing new. This is something I was talking about in the videos. Okay. one of the really stark warnings that I've seen. These moves higher should have burst, exploded. You should have been trading, okay, 65.50 easily, okay, 6,600. You should have exploded into new highs. We did anything but. In fact, if you looked at last week, okay, last week, and again, I also talked about this in the weekend update, what led us recently, okay, is what? The financials, okay, really? Okay, if that's the leader in the clubhouse, I was even talking about, getting in the lifeboat with Jamie Dimon. This is not positive occurrence in the marketplace. This is no one wanted to buy anymore the Microsoft. No one wanted to buy, okay, so much Apple. And I'm not ripping on Apple. Apple has actually picked up quite substantially from some of the recent lows down here at like 200, okay? But no one has touched Apple, okay, in weeks. If you take a look at Amazon, it's not making new highs. The only thing that did make new highs is Google. We sure as hell were involved in that one. Same thing with Meta. It's been breaking lower, okay, for a freaking month, but nobody wants to actually, say like, all right, tech is starting to break lower. So what happened in this last week of trade, like literally last week, some wild rotations. Financials actually broke to highs, okay? Even the energy sector, okay? No one has touched the energy sector all freaking year. Look, year-to-date percentage, okay, up 3%. But like a week and a half ago, it was down 3%. Okay. So when you start seeing sectors that everybody like agrees, people don't agree on much, but you start seeing sectors like healthcare, you're like, oh, that's a real pile of crap. And all of a sudden they start buying it. Okay. When you're buying crap, it's basically, okay, money management, okay, just pushing the edge of the envelope, looking for alpha. Alpha is any return they can possibly get, okay, and you feel like they're just gasping for air at that point. By the way, we're very close right now, okay, to the point to which we could start to rally, very, very close, but we're not there yet. Somewhere around this 63.90 matters, okay? At that point, you can start to look and be like, holy crap, we could rally now. But still down like 70 handles in the marketplace. Look at Boeing rally back. Okay, it's a rip in Boeing. The advanced decline line, though, is not getting better. Ironically, it's getting worse. Okay, so what's the rally in right now? Okay, tech continues to be a bid under the marketplace. This is what I would have expected to come back off. So, look, at least from where I sit, this is where you got to be real careful. Down the list of the usual suspects, Bank of America has also come back a little bit. I'm not concerned. Look, we have all the time in the world in Bank of America. The thing's been on for less than 24 trading hours or whatever, and here we are, 31 days. Okay, we're fine in all of these positions. So doing good, much better in XLP as well. XLP was something that was like over and done with, and that's come back quite substantially. Look at Boeing. I'm just shocked. Like this thing's trading like a tech stock over here. Go Boeing. I really don't want it to go up. This is interesting because there's no options activity whatsoever. And the volume is like incredibly, incredibly light. And normally I don't look at volume after a holiday weekend. Okay. But this one actually matters. Okay. S&Ps have got a bid back under them now for sure, right? So we popped right through that level, and the day is still young. Look at the financials though, coming off the bottom here. All right, look, I this morning, okay, I know some people are upset about like Tasty, so forth, but I don't have anything right now that is big strategic that I could shift around it. Like none of my positions, the Bank of America trade got a little bit close, okay, but I'm not making any big moves. The only thing that you would be doing this morning is probably intraday trading. Okay, I'm not jumping on the bandwagon trying to buy puts in here. The risk reward suck for that. Volatility has come down just a little bit since the bell, but I'm sorry, I don't trust this because if you look down here, okay, the VVIX ripped, just absolutely ripped. And if things were going to get a lot better here this morning, this VVIX would collapse much, much more readily. I mean, we almost hit like 110 on VVIX. Something I was pointing out also in the weekend update is the VVIX, okay, was alive and well. All your volatility products came back in a pretty substantial way. So let's back away and take a look at some specifics this morning in terms of trade. And when I say specifics, well, I'm actually going to cruise over to a couple of my notes in here. So a few aspects worth discussing. Sorry, I was jotting down some notes really quickly this morning as markets kind of in motion. So let's first of all officially break down the expected move, okay? As we haven't really taken a broader look at this, okay? This week, which is a holiday week of trade, okay? And it is a holiday week of trade. There's only 4 trading sessions, okay? What you're looking at right now is an $86 move. I've mentioned that, okay? But we've already hit. So let me give you what to look for now. So you have this $86 move higher or an $86 move lower. Boom, 2 minutes into the trading week, we hit it. Great. What to look for now? Okay. From a probability point of view, okay, there's always a higher probability of ending up inside, if you will, the standard deviation. All this $86 move is on either side is a standard deviation, okay? What you really look for in a week like this, though, is we already hit this, so like, does it really increase the odds of a major break lower? And the answer is it does, okay? Yes, by the end of the week, there's still a higher probability of being inside the expected move, okay? But now you've got a situation where, like if we were to retest these lows today, okay, you got a situation, you could break outside of this. And that's when things, though, really start to break down, okay? So it's not necessarily, in the cards right now or in the cards today. But the one thing, okay, that you look for in a week like this is the market really completely changing pace, okay? And right now, well, unfortunately, everybody's like, we're going to bid back up, we're okay. And people are coming in here and buying dips and so forth. Hold on. Before you do that, okay, you have a dramatically increased risk right ahead of you this week, not because of news or anything like that, okay, but the dramatically increased risk is you already hit the lower edge of the expected move a few minutes into trade. The volatility is already taken off to the upside, okay, and we've seen actually the face of correlation. Okay. At one point, there was actually over 90 products trading on one side of the marketplace, which is full-blown correlation. Even with the bid back under us, we have a dramatically higher probability, okay, of having a breakdown. It doesn't mean, okay, and I want to make this clear, it doesn't mean by the end of the week that we wouldn't recover. I mean, it's so early in the week. It's just this 4-day trading week, okay, where all of a sudden it kind of feels like everything kind of shook loose. This is by no means is this all hell breaking loose. It's not, okay, but everything kind of got a little crazy here for the first few minutes. You're 26 minutes into a trading week. The NASDAQ, okay, looks like it always does. Like, don't worry about it. The NASDAQ's got a bid back under it, okay? From where I sit, one of the things I can do is be a little bit of a voice of reason to you, okay? I don't look at this as a dip buying opportunity. And the reason I do not look at it as a dip buying opportunity, the news and Nvidia, Taiwan semiconductor, and many others, okay, it's not good. Okay, this is real, okay, context to where people might start to turn around and be like, yeah, this Nvidia thing may not necessarily work out so well. And at this point, okay, this is more than just a story. This is actual bottom line that could start to be influenced in Nvidia. So that news that's out there today in Nvidia, and was out there from Friday, isn't necessarily going away. The AI trade is kind of being called into question right now. The other thing is Nvidia, okay, for the first time in a really long time, is flirting, if you will, I think with this, somebody was mentioning as like a 50-day like moving average. Not that I give two craps about the 50-day moving average, okay, but it's the first real sell side. Why am I spending time in Nvidia? Okay, I mean, this is the biggest, gorilla on the block. And without it, okay, most of your other tech stocks are going to completely come apart at the seams. Okay. Nvidia is the trade right now. It is the trade. It's the trade that's driving Microsoft. Okay. It's the trade that's driving Meta. Right. It's the trade that's actually driving Amazon. And it's definitely an endangered species right now. So what you saw last week was an attempt to kind of rotate, okay, away a little bit from some of the big tech stocks. And you did see that, okay? That rotation came to a screeching halt. And again, my instinct in looking at this tape right now just tells me, okay, that people get so used to the buy the dip mentality that this is where they can get systematically taken apart. Doesn't mean it necessarily has to sell off today, okay? But I'm going to tell you, if you're trying, okay, to ride that pony back to the upside, I'm fine with it. You damn well better define your risk, because if we come off, we're going to come off very rapidly, okay, in the NASDAQ futures. And yeah, I'm talking about NASDAQ right now, because quite frankly, okay, the only reason that the S&Ps have had a 20-point bid under them, okay, is 100% NASDAQ, okay? It's 100% NASDAQ. Sure as hell isn't the financials. The financials couldn't get out of their own way until 10 minutes ago. Okay. They couldn't get out of their own way, so it's not going to be that. If you take a look at the energy sector is the same as the financials. Okay. They're just back to their opening rotation. So you have extreme risk right now as it relates to NASDAQ. NASDAQ is well above any of its opening range. Okay. If it comes off, it could threaten a little bit, but if it comes off, it's going to come off quite rapidly. All right, somebody was saying KC's back up and running. Okay. We're ooh. All right. Onward and upward here. Hold on, I'm logging back in. By the way, I was not alluding to any of the news in there. Okay. DeepSeek is shifting away from Nvidia. Okay. Basically, here's a couple of pieces of news. First of all you have to do is look at any of the Chinese tech firms. Okay. Chinese tech firms are absolutely exploding. Okay. Why are Chinese tech firms exploding? Okay. Apparently I can't type in anything right now. There we go. Chinese tech firms are absolutely exploding. They're all moving away from Nvidia GPU. So it has been a look, no one in the Chinese government is coming out and saying like, look, you. Okay. There's no question at this point. The CCP is influencing some of the top Chinese tech companies to use Huawei for their chips. That was hit number one. Okay. And you can look at any of these tech companies. So DeepSeek is one of the leaders in AI. I don't give a crap what people, they can't even keep up with Silicon Valley, except they are. Anyway, DeepSeek has definitely moved away right now. They have come out publicly and said they're moving away to other GPU. Several other major Chinese tech firms, okay, are moving GPU away from Nvidia, okay, and exploring other options. They don't want to deal right now. Okay, on top of it, okay, Nvidia. Well, Nvidia, the news is Taiwan Semiconductor manufacturing waiver to freely ship essential inputs to its main Chinese chip making facility has been pulled. Okay. Do you know that Taiwan Semiconductor, what do? Okay. Taiwan Semiconductor makes everything for Nvidia. Nvidia doesn't do anything. What do? Okay. They have a guy that wears a leather jacket. And it's the most profitable company in the whole freaking world. That's it. They design the chips. It's kind of like Apple. Apple's like, we're the greenest company ever. Okay. We build these iPhones and it's good for the environment. They designed the iPhone, hand the plans over to Foxconn, destroy the planet on the other side of the planet, and continue their business. The exact same thing is true of NVIDIA. Okay. The green initiatives that come out of Apple, okay, at this point are absolutely like shockingly laughable. So the between Apple, okay, and NVIDIA, NVIDIA, okay, what do? They design crap like the Blackwell chip. Okay. Have they ever built one? Maybe. They can't build that stuff. Okay. They can't. right? They literally can't build it. So what do? They ship it over to Taiwan Semiconductor. Well, Taiwan Semiconductor now has issues. Okay, there are going to be waiver issues. So parts cannot necessarily move freely back and forth. Look, this one, the reason that the stock sold off and then bid back is because no one believes, okay, for even 1 second that Trump is actually going to stay on that bandwagon. They all believe he's just going to be like, sorry, it's a misunderstanding. Okay. Today is Tuesday, so it would officially be Taco Tuesday. Um, don't even get me started with Apple can't make a TV or a car. Okay. Although I will say this, I have the latest generation of Apple TV, which is like the little box that like runs your TV. I do have the latest generation of Apple TV in this house. Okay. That crap's pretty good. It's pretty good. The remote control is very cool looking. And I can piss off my children and turn off their TVs remotely from my phone from anywhere in the world, which I do. Okay. Which I definitely, I'd be like sitting on the island, like turning off the kids' TV. I'm like, time to go to bed. Boop. Okay. It's easy. Anyway, Taiwan Semiconductor could be in some trouble. Moreover, okay, I don't know about you, but I'd be a little bit nervous about China just walking into Taiwan like any day. Okay. They got all the players over there. Does anybody else have a problem? Like I was talking about this in the weekend. So I talk to all the people here at TheoTrade. We talk throughout the course of the weekend. Okay. We just kind of BS in our own little chat room over here. That's right. It's BS in there. One of the things, if you had the opportunity, would you hug Putin? Like, seriously, would you hug him? Okay. I don't care if you're the leader of another nation or whatever. Like, he doesn't seem like a very huggable guy. I'm just throwing that out there. Okay. It's a little disconcerting. Okay. When you have, Modi hugging Putin. Okay. All right. I'm on my own on that one, huh? Okay. Oh, come on, man. And then I do find it strange. Okay. That people are holding hands. Okay. They walk and they hold hands. It's very weird. Okay. I don't necessarily understand the cultures of India. Okay. Or Russia. Actually, I understand a little bit more about like, Eastern European. Uh, but yeah, the holding hands. Okay. It's a little weird for me. Okay. Not that there's anything wrong with that. It's a little weird. Uh, Continuing on over here. Um, yeah, by the way, he is, what if he's riding a shirt, like riding a shirt, riding a horse with no shirt? I'm okay with that. Okay. I'm okay with that. Uh, the hugging thing, it's a little friendly. Okay. And it's not like, again, it's just, it's Putin. It's Putin. Doesn't matter what you think. Okay. It's, a lot of people have died. It's not like somebody I would go up and like embrace. Okay. Continuing on over here. Um, sorry, looking at the yeah, so the Indian culture holding hands is actually pretty common. You know what? I've spent a lot of time in a lot of places in the world, but I have not spent time in India. And actually, one of my really close friends here, um, he spent a lot of time recently. He's actually in his late 60s. He just recently spent a lot of time in India. He's a designer, builds homes and so forth, but he's into design. He's like, you have to go to India. He's like, you'll appreciate it. Okay, all right. I'm open-minded. I'm going. Okay, I'm going. One of these days, I'm going out there. Okay. Anyway, with the market is left to well, as I said, it's Taco Tuesday, so maybe Trump actually shifts something. But in the meantime, okay, you have to be really concerned about Nvidia, because Nvidia came out on their conference call. It was like, again, Jensen, sat down with Trump. Maybe he knows the game plan, but specifically in Nvidia's conference call, which I don't usually listen to this crap, but I thought something was very interesting. He said all of these metrics are without even including China. Clearly, okay, he knew that they were probably going to do a rug pull in China, and they have at this point, or that China was actually going to turn tail. And so the Chinese tech companies are going to be using GPU that is not, okay, they're going to be using GPU that is not US designed. It looks like they're all shifting away to this company, Huawei. And a lot of people don't even know what a Huawei is. They make cell phones. By the way, they were originally, okay, for those of you that are like up to speed on some of the technology, originally, okay, Huawei, which is, it looks like Hawaii, okay, HU, whatever. Anyway, originally, we're going back years. They were called into question because they were making cell phone towers for much of the United States. Like your cell phone tower technology, if you were AT&T or Verizon, okay, T-Mobile, your cell phone tower technology was coming from this company, and it was coming in mass quantity. And it was like a national security incident. We're going back way back. It was a national security incident. They said, stop buying cell phone technology from the Chinese, yada, yada, yada. Okay. Then they arrested, okay, we're going back now a little bit, more recent times. Then they arrested the CFO, okay, of this company in Canada. They detained her for quite some time. I believe they finally handed her back. Okay. She was actually specifically linked to some really high powered people. Her dad was extraordinarily high powered in the CCP, goes on and on and on. Okay. Huawei has turned around, right? Not only building like, cell phone tower technology, they started building cell phones, and then like out of the blue, like overnight, GPU, like it just showed up like that. It's freaking amazing what they can build. Okay. I don't give a crap what anybody says, they can't catch it. They can't do design. Okay. They have the ability to build stuff, okay, faster than anybody on this planet, period. Okay. So Nvidia is, I mean, they're caught with their pants down if Huawei starts to build GPU at scale. And Huawei can rock even Taiwan semiconductor and flood the markets. The only place the GPU is going to matter, like, oh, it's the US, except everywhere in the world, okay, they could be buying Huawei. So it's going to be really interesting to see the future right now of NVIDIA kind of being called into question. I don't usually go down like these paths, okay, but I'm surprised right now how well NVIDIA is actually holding up, okay, in the face of this. And that's not necessarily negative implications for something like Meta, okay? Because in the end, I think it actually is going to cause GPU to collapse in price. So you get this Chinese manufacturer that comes on and starts flooding the marketplace with GPU, okay? Prices should collapse. It's really just bad for NVIDIA. Onward, okay? Onward and upward. Be really interesting to see too. Would Meta start buying from Huawei? They're going to be banned from it. I'm sure that's going to happen. Anyway, as I was saying, with watch carefully in the Nasdaq, rolling over, maybe. Okay, this doesn't feel like it's really rolling over just yet. If it's going to roll over, you're going to know it. It's going to get a little bit more hostile out there. So anyway, the DeepSeek shifts away from Nvidia. Taiwan Semiconductor loses their waiver. Palantir has been the stock to watch. Okay, really every freaking day. I keep talking about high beta breakdown last week. And for the last few weeks, Palantir has been kind of on the dance floor. It remains completely range bound. Today is interesting. Look at it rip. Okay. There's a dip buy going on in here for sure. But the options metrics, okay, are not really displaying much. So I'm going into the analysis right now. Okay. Palantir has come way back. I mean, it's only down $1 right now after being down quite considerably, which we'll look at the price action in just a moment. I'm less concerned with the price action, more or less. Look at the number of calls being bought versus sold. It's kind of equal. Okay. Number of puts being sold versus bought. It's a little bit more bullish. Like this is leaning a little bit more bullish. Okay. But that kind of move, and this thing was trading 150, okay, has shot $5. These are huge percentage moves. This thing is a $150 product that just shot up $5 freaking, okay, should be on your radar screen. The reason it should be on your radar screen, okay, look at this, more puts are trading today than calls, which that is unusual in here. Like the put sizzle is on fire versus the call sizzle. So this is far from clear. Like what I'm saying is the order flow going on under option statistics in here, this is far from clear. Okay? It's very rare that in something like Palantir, in Palantir, lately we've seen double the number of calls trading than puts. Today, you've got more puts than trading than calls, okay, which is really kind of egregious and weird. You've got the stock moving very rapidly to the upside. So there's definitely a bid back onto the marketplace. Okay. But you can kind of feel like the whole footing of this marketplace changing a little bit. I'm watching Palantir because I think this 150 level is absolutely critical, not just for here. I think that this is kind of the a bellwether for the marketplace. If Palantir breaks into the 150, okay, I think it's, really considerable, if you will, for most of your major tech stocks. I'm watching some high beta stuff again, kind of breaking down in the last week. Now, there's some comeback stories on the day. Netflix tends to be its own animal. I'm not really reading into that. Comeback story of the day. We're continuing to try to rotate into the energy sector, right? So there's an attempt to rotate into energy. Is it because oil is higher? Okay, maybe. Like oil has made quite the comeback today. Oil, okay, had flown to 66, dropped to 64. It's got a bid back under it. So as oil is actually coming back, so is the energy sector. Again, a little bit of a rotation. Okay, we're also attempting to rotate once again into where? Okay, areas that are not tech. That's the bottom line that I'm trying to, the point I'm trying to make over here. Okay, and again, I'll make it clear as day. We are rotating right now, or attempting to rotate. Okay, the advanced decline line got significantly better. That's not necessarily a positive. And it's weird to say that because you're like, no, but the advanced decline line is getting better. But you have to understand, we're rotating right now. Okay, BABA doesn't count because that's, Chinese, ADR in here, but we're rotating. I'm looking at sectors. We're rotating right now, okay, into crap. And when you rotate into crap, it's cause for concern. Like you're like, but none of them are really up. Okay. Give it some time over here. Look, you got stuff like XLP. We tried to rotate into it. This is kind of rolling over a little bit on a percentage basis. Look at XLU. It's outperforming. Okay. Materials and so forth, outperforming. Right. And meanwhile, okay, home builders, this is getting a little bit more dicey, but still outperforming. Outperforming what? Everything's outperforming tech right now. So again, tech, it is your marketplace. If it goes, everything's going to go onward in here. Trade setups. I don't have any right now. I literally blanked this out this morning. I had tons of trade setups like that overnight. We just cracked, snapped. It's no great trade setups. I'm watching, Boeing, Bank of America, TLT, XLP. And again, I want to reiterate something about TLT. Okay. I have a position on. I just put the position on. Okay, it's 45 days out. You're like, oh man, look at it. It's already, it's up a couple of bucks over here. Okay, don't even look at that crap. It's a very different type of a trade. And again, I want to bring this up. Okay. By the way, the Nasdaq looks edgy right here. Edgy. I want to bring this up for a second because there's a huge misconception. Okay, of what I am attempting to do in here. I paid 90 cents for a $5 wide spread. Five. Did we determine that was King Kong Bundy that says that? Five. Don't ruin my childhood. Okay. Everybody already has. Okay. Gone downhill. The number of like childhood like heroes that are in jail or like dead. Okay. And not dead from natural causes is too high for me. My brain can't take it. Anyway, somebody was saying, what pays the dividend? What's paying a dividend? Who cares what pays a dividend? Okay. TLT can pay a dividend, but it doesn't matter. We're in puts. So here we actually have, all right, a very different type of spread in TLT. TLT, which is the 20-year iShares. Okay. Paid 91 cents for it. Okay. Hold the line. You got to be able to make when you're taking a shot on a spread, when you pay a buck, all right, for a $5 wide spread. That ain't no in-out spread. You're not trying to make 55 freaking percent. Okay. So people are going to be putting in orders like, I'm going to close it for 55% gain. No, you're not. Okay. Because you can't make money, okay, taking shots and then closing 55%. You put $1 at risk, 55% ain't going to cut it. because this is a lower probability trade. In a lower probability trade, you have to make a higher return. Okay, 150, 200%. That's where you need to be. When this spread is at $2.50, if this spread is at $3, okay, then I'll consider closing it based on a number of factors in the marketplace. But these out of the money spreads, okay, are in total contrast to what an in-out spread is. And people don't understand that management of the trade is way more important than finding the trade. Management of the trade is, okay, it's the most important aspect. Any monkey can find a trade. Look, I found this trade. It's how I'm going to manage it, though, that's going to be the defining factor. I don't give a crap like, oh, look, you found a good trade. Is this a good spread? Everything's a good spread. Okay, how do I know? As long as it's liquid, everything's a good trade. How are you going to manage it? Okay, people naturally let, okay, what? Winners, they cut their winners off short and they let their losers run. I have 91 cents at risk in here, period. And if I have 91 cents at risk with a very low probability of a high payout, okay, I have to make the high payout to compensate for the fact that if I continue to do this trade, like this trade, when you pay $1 for something that could be worth $4, okay, you got to start to think about it like an odds. I got like a 1 in 4 shot, baby. Okay, it's a $5 wide spread. I know that, but the point I'm trying to make is, you risk 1 to be able to make 4. Okay, you took the slow pony that has a shot, but might not be able to win. So what do you have to do? Okay, you got to go in there with the idea that I'm going to lose 91 cents. I'm going to lose 91 cents. Okay, but your outcome could be a positive one. And if it's positive, though, you got to make sure, okay, that you're getting out of that spread, making 150, 200, okay, plus percent, because you're going to strike out a lot. And that crap is important. Okay. And here's one where I know that Eric was actually putting in like a GTC. You can put in a GTC. GTC means good till canceled. Like you can put that in. But one of the weird things about out of the money spreads, okay, I don't justify, and again, this drives people nuts. It's one of the reasons I don't have class on this. I always get that question like, excuse me, can you do a class on these out of the money spreads? I'm like, I don't know if I want to. I don't know if I want to, because the out of the money spread is the weirdest to close because there's factors other than just percentage gains. Like, tell me what's going on in the market. You guys have to recognize today, okay, a bond crisis is kicked off today. A bond crisis. Was there a bond crisis a day ago? No. Was there a bond crisis a week ago? Absolutely not. But we've been talking about this nonstop. Okay, you can see it. Governments are spending like completely degenerates. They're just the worst type of degenerate. Okay, they just keep spending and spending. Eventually, all right, the markets are going to look at this. And again, for those of you that do not understand, okay, the simple context of the bond market, if you spend like a degenerate that's completely out of control, okay, and you start like looking like you're going to start to default, what do they do to you? They raise the interest rate. Why? Just push you over the edge for the default. But that's what the market is designed to do. Okay, the market is designed to say like, hey, okay, are you out of control? Like, look, I don't even believe you can pay this crap back. So what do? They start to sell the bonds, because when you sell the bonds, the interest rates go up. So again, the worst thing that can happen to the US government right now is interest rates go up. Why? Because they're rolling over huge amounts of debt. And guess what? The worst thing that can happen to the US government, right, is going on right now. Why do you think they're trying to kick out members of the Fed? Like, bring the interest rates. Okay. They're trying to kick out members of the Fed right now because I think they have every intention of instituting yield curve control. And they can't have any dissent on that one. It's all or nothing. They did it inside of Japan, okay? And they're going to do it here in the United States. There's no freaking choice. We're going to have yield curve control, in my opinion, within 18 months. I've been saying that now, okay, for like the past 6 weeks. It's coming to a theater near you. For those of you that do not know what yield curve control is, okay, they're not going to let this 30-year bond treasury float freely. They're not going to let it float freely. I can't say that sentence. That's it. Bring more coffee into the situation. That'll help. They're not going to let this 30-year float freely. They're actually going to start to influence its price. And they did this again. They did this in Japan. And I don't know if you guys realize, but in Japan, there were weeks where the 10-year in Japan didn't have one trade on it. It was open for trade, but it doesn't matter because everybody just basically rolled over and said the government has control of it, so screw them. Okay. There's nothing you can do. And they paid you basically next to nothing in interest. And the government basically bought their own debt. Okay. There's nothing like buying your own BS. There's a lot of that here in the US. So I think they're going to institute yield curve control. I think that's why they're actually trying to align, if you will, members of the Fed. Okay. They're waiting for Jerome Powell to get the hell out. Okay. And I guarantee that they're going to interview candidates. And those candidates, okay, they're going to basically sit them down. And Scotty B at the Treasury goes, do you support yield curve control? Okay. If there's any even hint of a dissent, they're like, and they're out. That's the game that we're going to have to play. Okay. What do you think? Neil Kashkari? Is he going to be your boy? Okay. Come on. He'll play along. Anyway, a little bit of a bid back. Okay. It's edgy out there, man. It's edgy. As I said, like, I don't think that's the NASDAQ rolling over, but we're floating around over here. Okay. Yeah, this is, by the way, if the United States goes into yield curve control, it effectively allows the rest of the world to do that too, which it's not like a lovely future. Okay. Save us, AI. That's when AI is like, I was doing you a favor. I decided to off all of you because you're idiots because you have yield curve control. Wait till AI actually says that. Like, this is the dumbest thing I've ever seen. The hell is wrong with you people? Okay. I like when AI, speaks like in okay, informalities. Okay. I've been working on my little AI agent to speak in informalities. Okay. I like it to be a little bit like, less formal. It's good stuff. It's good stuff over there. By the way, what Peter said is absolutely true. Stop freaking spending. Okay. You have a government word for stop freaking spending is austerity. Okay. Austerity. I don't think it could be done. All right. I don't think it can be done. Look what they did to Elon Musk. Okay. They're making fun of the Cybertruck, man. They're making fun of the Cybertruck, which in its natural color does look like a rolling dumpster. I will give you that. Okay. It does look like one of those giant rolling dumpsters. But if it's in like, any kind of wrapped color, it's pretty good. Yeah, we just jumped from austerity to Elon Musk to driving in a dumpster. It's good. Okay. It's how a couple of short circuits in the brain. So as I was saying, I don't have trade setups right now. Okay. This is a marketplace that is evolving as we speak. The bonds have recovered quite substantially. Like, there's a bond crisis. You wouldn't know it by looking at the bonds. They've already recovered substantially. Look at their volume, though. It's huge. Most days go by, and you don't see over 300,000 contracts. We're into the trading session and we're already there. Okay. These high volume days in bonds, okay, those right there, these are a contract roll. It's like it almost doesn't count, right? So 300,000 contracts are a really, really big day in the bond market. So we're coming back from our 3-day weekend, okay, and we're coming back with a bang over here. Obviously the marketplace to watch the remainder of the day is going to be NASDAQ, okay? It is great, whatever. I have positions on right now, but, I'm coming into this a little lighter in inventory than I'd like to be, okay? But what I'm going to have to do is I'm going to have to shop around. What I like to see in stuff like this, okay, days like this, what am I really waiting for? Let's see how the VVIX evolves, okay? If you'll notice, quietly in the backdrop, okay, the markets kind of rallied back up, stabilized. The VVIX, though, okay, that's dangerous. Even with the market stabilizing to some degree, the VVIX tells a very different story. There's still hedging activity going on right now, okay, off of what has kind of been a bottom, albeit mildly. You should see this drop on a day like today. Typically, volatility overreacts dramatically. In this case, what they're saying is, yeah, it reacted, but it hasn't really contracted at all. And that is a bit of a tell. It actually quite literally keeps me on the sideline. The other thing that's really disconcerting today, is the move up in gold. Okay. Like, why is that disconcerting? It's great. because the dollar is also higher. The dollar actually barfed back a little bit, but the dollar is higher. Okay. Gold is exploding to the upside over here. So there's a reach right now, okay, to buy metals. There's a lot of reasons for it. By the way, look at silver. You guys haven't seen the break in silver. Okay. This is, come on, man. I typed it in. Look at silver. It's flying. Absolutely flying. Now we've been in positions recently in silver. We've been in positions in gold. We were profitable in both. Okay. Do I look at this? Oh crap, I missed it. No, because you didn't see this one coming and neither did I. All you knew is volatility is going to make a comeback. Did you know that all of a sudden we're going to be in the midst of a bond crisis? Okay. I mean, that came out of complete left field. And the one thing I will say about a bond crisis, okay, a crisis of bonds. The one thing I'll say about a bond crisis, they can go off into the night very quietly. Like you may not even hear the term bond crisis tomorrow. Okay. But once the damage is done, the damage is done. And the chicken is done right now. Damage has been inflicted, heavy damage, okay, into France, heavy damage right now into the UK. And that damage, okay, is just that's kind of crap that you don't think about here in the US. Like you look at US markets, and US markets definitely lead world markets. There's no question about that. Okay. But real damage has been inflicted into many, okay, sovereignties with respect to their debt. Jeff Bierman, ladies and gentlemen, Jeff Bierman will be with you for the next hour here at TheoTrade. Anything in particular you're looking at? I'm sure there's some strange stock like General Mills I have missed today.
No, you forgot to mention today's risk impact week. I'm going to spend 4 days talking about risk.
Risk Impact Week.
Yep.
Sounds exciting. I'm talking about volatility this week. My whole
Well,
week.
that's what risk is. It's volatility. They go hand in hand. What
Hey,
better time to talk about risk than now? Because I think we're on the forefront of a change in tempo and thought and market, as Garrett said. It's a big game changer this week.
you know what the worst thing that could happen today is? The worst thing that can happen is actually we rally all the way back. You know,
That's not good.
it's
No.
not good. Yeah, I know. Like I'm looking at the market, and I'm like, they're going to rally this thing all the way back. Okay. And you know, the problem is every time you rally back like this, you get more people. They're like, they're hooked. They're like, down. It's markets are diabolical. Please never forget that. They are diabolical. And one of the sayings like I've always had kind of around some of the people I've worked with is we always used to say the market as a whole goes as far out of its way as possible to screw each and every one of you individually. Once you understand what that means, okay, you're gonna be much better off in this business. But I kind of fear the rally back. And quite frankly, like I don't have a lot of skin in the game either way today. Like if we rally back up, oh no, Bank of America is going to be unchanged. Boeing is beating the crap out of me though. Okay. I'm running out of time in Boeing, Jeff. I've got 10 days left, man. 10 days left to live in Boeing. Okay. They just, I'm not asking for a lot, but I need a little sell side activity in Boeing. Okay. Apparently they've been able to fly aircraft and keep them up in the air this last month. Who would have thought? All right. So you're kicking off Risk Impact Week for
Mhm.
4-part session. All right.
Yeah, but I'm going to talk about a little bit at the market today, technically, because this is a game changer for the first time today in 6 months. It's a game changer.
Really?
Yeah,
Okay. Somebody's
I'm
saying is,
seeing I'm seeing things other people are not seeing, and I'll kind of throw them out there.
are you seeing dead people again?
No, but at the end of this, we could see a lot of dead people who think that this is a buying opportunity, which I don't see it as.
Well, yeah, the big change though, Nvidia flirting with 170. Okay. I don't see a lot of other like real critical breakdowns in here, but well, we'll see by later today. Again, the big move on the screen right now is we did in fact hit the lower edge of the expected
Expected
move.
move.
We're off of it, but this looks like it looks like it's going to head back to it to me. All right, Jeff, I'm actually going to turn it over to you. Have a good hour. I'll be back on. By the way, I'll be here the entire trading session. I'm not going anywhere. It's only a 4-day trading week. I had a lot of crap to do. These 4-day weeks, things get crazy. So I'm going to be with you guys the entire session here. If things do get crazy in the marketplace, we start to break below the lower edge of the expected move. Anticipate me to come actually back on, interrupting someone's session. Probably not Jeff, but I'd love to interrupt like Brandon or Gianni. Sounds like a game plan. All right, stay with us. Jeff Bierman coming on right now.
All right, let me kick this off because I've got an hour, and if I had 3 hours, it